Hello everyone, welcome to today's video. I am so excited to have you join us as we tackle some of the most crucial and often confusing topics in financial planning. IRAs, 401ks, and retirement savings. These are subjects that impact every one of us and impacts your family, your well-being, but they could feel overwhelming without the right guidance. That's why we've brought in an expert here to simplify it all for you. Today, I'll be sitting down with Theo from New York Life, a seasoned professional in the industry who has built a career around helping people like you and me make smart decisions with our hard-earned money. Theo has years of experience answering the big questions about retirement savings, like how to roll over a 401k, what you need to know about IRAs, and how to plan for the long future ahead. You'll walk away from this video with actionable tips, clear explanations, and a better understanding of how to make the most of your financial opportunities. So whether you're just starting to think about retirement or you've had questions for years, this conversation is going to help you take the next steps confidently. Stay tuned as we bring in Theo for an engaging, practical, and insightful discussion. Your financial future is worth it. Let's get started. All right, so here we have Theo from New York Life to help us break all these IRA questions down. Welcome, Theo. Tell us about yourself and what you do and how you're going to help us out here, because we have lots of questions for you that a lot of people want to know.
Yeah, thanks, Mal. Thank you so much for having me. I've been with New York Life for a little over 5 years. It'll be 6 years in April. April 1st of this year will be 6 years for me. And I've built my practice on doing rollovers, IRA, retirement planning for my clients. A lot of times what happens is you leave a job and you just left your 401k behind at your previous employer and you're just going to start a new one with the new employer. But you have options with that old 401k. We can turn it into an IRA, so at least it's professionally managed, and you can, make it more specific to your investing needs. And that's, again, that's what I've built my practice on, is being able to help my clients with that. And the nice thing for my clients is I'm going to make them some money, I'm going to save them some money, and then I just help them with some paperwork on the front and back end, and they're all set and ready to go. So it's a pretty simple and painless process for them.
That's what people like to hear. Help save money, help make money.
Right.
And what's actually very important is, I think, for our viewers to know is, a lot of times we're talking about saving money. It's about planning it with somebody like Theo, so that you are not the one just saving it in by yourself. They are the experts that help with this. So that's why you reach out to them. So we are going to ask one of the very first questions that have people questioning things about IRA. And I guess the first thing I want to ask is, why is it so important for people to understand IRAs, 401ks? What do they gain from learning about these accounts?
Yeah, absolutely. So the number one thing I would tell you is, when you're planning for retirement, you're planning for an event, right? So similar to when you're, if you have any children, you're planning for college, right? You're planning for that 4 years. You're planning how we're going to spend that money over the 4 years, like the best plan that we can create. Your retirement's the exact same thing, but instead of 4 years, it can be anywhere from 10 to 25 years, depending on how long you're living. And now that we're all living longer, this has become even a more important event to plan for. And then obviously with changes to like Social Security and all these different things that are happening, we have to be better at self-saving, being better at planning for IRAs, for 401ks, and giving ourselves different options. And I'm not an accountant, I don't pretend to be one, but I think we can all see that taxes are probably going to go up here in the future. So how can we better plan to be ready for when these different things happen moving forward? And the best way to save is having a plan.
Interesting. And then let's talk about when you do have this plan, right? You do come up with this plan. Do you execute it with your clients, or you just leave it with your clients?
No. So ideally, if they want to take the information that I've given them and they want to go with someone else, that's their choice. I'm not going to force them to work with me. But yeah, ideally, if we sit down and we have these conversations and we come up with this plan, my ultimate goal and my ultimate job is to help them institute this plan. So whether it's doing a rollover, whether it's creating another, IRA for them, whether it's turning their current 401k into income for themselves, like whatever it happens to be, like I said, my job is to sit down. I'm going to ask you the questions. I want to get to know you a little bit better. I want you to get to know me a little bit better. And then the plan at the end of the day is to institute it with me. But like I said, at the end of the day, if they want to go with someone else, that's up to them. I'm not going to force them, quote unquote, to go with me. I'm going to give them that option, but I want them to have a solid plan so that when they do sit down with me or anyone else, they feel good about what they're doing. That's why the education piece is so important. I want them to understand why we have the things in place that we do. So that way, when they're moving forward, they feel good about everything that we've set up.
Okay. And when they do have you to help, you are there to help guide them, though. You're there to help them with those decision makings and all that stuff.
100%. Yeah. That's like I said, education is a big part of it. But to make that decision, like, yes, we're going to move forward. This is what we're going to do. Yeah. That's what I'm here to help them out with.
Awesome. Awesome. Okay. So we'll go into the main question about IRA. One of the top questions about IRA. So what exactly is a rollover IRA and when might somebody need to use one?
Absolutely. So rollover IRA. So what happens is when you're working specifically in corporate America, but most companies, you're going to have some type of 401k, 403b, 457b, it's different things like that. You're going to have these different things that it's a pre-tax retirement account more often than not. There's different things in there, but we'll start with the kind of the basic high level view. And then what will happen is when you're at this company, you're working at this corporation, you're putting money in pre-tax, that it's coming out of your check, you're not even seeing it. And then you decide to go and take a different job. So that different job has a different 401k. They work usually with a different company. And basically, if you're leaving your old 401k, your previous employer, it's like leaving your wallet at a restaurant. And no one would do that, right? Like that's not anything you do. So by moving it to an IRA with New York Life or one of these companies that are out here, what we're doing is we're making sure that everything is staying with you, right? So that way, because a lot of times what happens with these 401ks is not professionally managed. You're calling a 1-800 number. You're getting a different person every single time. But when you're working with me, for example, you have me. Like I'm the person that you're going to call and connect with if you have any questions about what funds you're in, how much fees you're paying. If an emergency comes up and you have to take money out of it, I'm your full contact for all of those different things. So, and then, like I said, I'm also the one who's going to professionally manage it. So if we have to make changes, the market's changing, I'm going to be the one that's going to do that. Where in a 401k, you don't get that luxury really. It's just, it kind of sits there and no one's professionally managing it. And you don't have that one-on-one connection that you would if you had, a financial service professional like myself working with you to help manage that for you.
Which is very important because then if you knew that all these questions, you would answer it for people already, right?
100%.
And so I want to touch on something though. You said it's like leaving your wallet at a restaurant. Can you go into detail more with that? Does that mean you've just left it? Then it doesn't come back to you anymore? Can you elaborate on that?
So what I mean by that is that if you earn your money into your 401k, right? Like you've put your time in, you put all this money in there, and then you have, let's say, $100,000 in there. When you want someone to professionally manage that money that you worked hard for, that you're going to use for your retirement. Same thing with your wallet, like your credit card's in there, your ID's in there. You have all these different things that are in there. You're not going to just leave it there because it means a lot to you. So your 401k should mean a lot to you as well. This is your money. This is what you've earned. This is what you've worked for. So you want to take care of it. So it's there for you in this long event that we have that's called retirement. Like I said, it's a long event that can be, like I said, anywhere from 10 to 25, 30 years. So we want to make sure that we take care of it and we take care of the funds that are inside that plan.
Okay. When you leave the company, is the money still yours?
So yeah, so for most companies, like there's like a vesting period and different things like that. It might be a year or two, might be 5 years, might be 10 years. It just depends on the company. Everyone is different. But between us having these conversations, we'll get that answer. We can see how much you're vested for. We can see the amount that's in the account because you get statements every quarter. At least you should be getting statements every single quarter. So we can look and see what's in the account, how much you can take over, and then decide what we want to do as far as moving it into that IRA.
That's awesome. And so you even help with that too.
Yeah, it's full service, right? So when we sit down, we have the conversation. Obviously, like I said, that first meeting is what we call like a fact-finding meeting. Let's figure out, what's in your portfolio, what's in your different accounts. Do you have this? Do you have that? And then from there, Maya, why don't you pull your statements? Let's see where you're at. Let's see what funds we have. Are they in a pre-tax account? Are they in a post-tax account? Are they in a Roth? We can figure all those different things out. But like I said, it's full service when you sit down with me.
That's awesome. Now, the next question is, how can someone ensure they've maxed out their IRA contributions?
Yeah, absolutely. So there's a couple different rules of thought. So anyone who's under the age of 50, $7,000 is the maximum you can put into an IRA.
Okay.
Over 50, you still can do the 7,000, but if you don't have any other account set up, you can do an additional 1,000, what they call a catch-up contribution. So you can do up to $8,000 if you're over the age of 50. So if you're going to create this IRA, Obviously it depends on how much funds you have on hand, but up to $8,000 if you're over the age of 50.
Awesome. Awesome. And what's the difference then between the calendar year for contributing and the associated tax year for a Roth IRA?
Yeah. So the calendar year is the calendar year, right? So January 1st to December 31st, you can contribute up to that time. However, you can also do it from January 1st up to essentially April 14th, tax day, and still declare it for the previous year. So you can still do that. You still have that option. And again, the nice thing about the IRA portion is that it is deductible to your income. Your Roth is not deductible if you decided to create a Roth, but as long as you have it in place for at least 5 years and you take it out after 59 and a half, when you take out the withdrawals, they're tax free. So that's the nice benefit. So when we sit down with clients, one of the questions we do ask is if they know their tax bracket. So we can kind of determine where they're at and how much their adjusted gross income is as well too. So we know if they have the option of the Roth, because they may not even have that Roth option if they make too much money.
Oh, interesting. So depending on how much you make, you might not even have the option for that.
Correct. Right. And again, that's a discussion that we'll have. And that's when I talk about we're going to have that full conversation. That's what I'm talking about. Like we have to get to the root of the issues, the questions, all the different things that we have, because we want to make sure that we put them in the best solution possible.
And this brings up a critical point, which means if you miss out on showing you everything, that means you might miss out on some opportunities. So let's say I have all my statements, 20 statements, and I should be showing Theo all 20 of them, and I actually show you 15. There's a likelihood that I will still not be getting the best out of my financial picture.
100%. So one of the things that I've done a lot too is consolidation of 401ks into an IRA. So if you've been at 3, 4, 5, 6 companies, which is not unheard of by any stretch of the imagination, it's actually fairly common. You have money in all these different places. So not only do you have money in all these different places, you're being charged fees on your money different places. So why not combine it into one place? So one, you know where it's at, but then two, you're only being charged one fee on your total amount as opposed to being charged 5 or 6 fees on 5 or 6 different accounts. But then also, and for peace of mind, if something does happen to you, your family knows, okay, well, I know client X created an IRA at New York Life. So everything we think should be there, right? And that's why we don't want to have you just give me half of your statements. Right. Let's get everything. So that way we make sure that we get everything combined into one spot. And like I said, that gives you that peace of mind as well.
Right. Wow. Our next question is, can you walk us through how to set up a Roth IRA? And I know we don't have systems here, but just the process of setting it up. I know you've touched on a couple here. If you could elaborate on that, that would be great.
Yeah. So you're able to create a Roth. You can do it obviously at New York Life or, Fidelity or, Edward Jones. But also if you go to your local bank or credit union, you're also able to create a Roth IRA. Wow. We all have different rules as far as what it takes to start up a Roth IRA. Like some places it might be $50, some places it might be $100, some places it might be $1,000. Obviously, that's a case by case basis. You'll have to look at it. But what we're doing with the Roth is we're creating after tax funds, right? So this is money that you've already been taxed on. This is your paycheck. You have some discretionary income. You said, you know what? I have an additional $100 a month. I want to take that money and I want to put it into a Roth IRA. So we can put up to $5,500 below age 50, $6,500 above age 50, as long as you obviously don't have that account set up. Like I said, it's another great way to save funds. And it's a way to have some money in retirement that's already been taxed. So as long as you take it out after 59 and a half, you have money that's available to you that's not going to be taxed. That's one of the benefits of having the Roth. But again, if you make too much money, you don't have access to the Roth IRA.
And so pretty much you could be with a company, be on 401k, leave, set up an IRA, go back to another company, get 401k again, still be contributing to still that old IRA.
Yeah, so it just depends on how the old IRA was from. So if it was like pre-tax money, then no, you wouldn't be able to contribute anymore because it's pre-tax money. There's no way to put that money in there. But you have more pre-tax money coming into the new 401k that you're setting up with the new company. So you have just different accounts. That's why when we look at statements, we want to look at the full financial picture. We don't just want to look at one thing. We want to look at all of it. And then the other thing that we want to do for our clients is we want to give them that full financial picture, but you don't have to do everything today, right? So let's concentrate on one thing at a time. Yeah, let's do the rollover. Yeah, let's look at an IRA down the road. Yeah, let's look at a Roth down the road. But it's not like you have to set up all of these things in one sitting. We can do these things bit by bit.
Awesome. Wow. That's a great amount of information on IRAs, pretty much for anybody who's thinking about them or who's had these questions about them. All right. We are going to move into the next one, which we've sort of talked about when talking about IRAs, but talking about 401ks. And let's talk about the importance of 401ks. I think I've mentioned my example to you at some point in time. Like, I worked for a while, didn't do 401ks till somebody told me, like, what?
Yeah.
And that's because I was not educated about it. And I lost years in that. So I think it's important that we sort of touch on this topic. And so if you could tell us, the importance of knowing about 401ks, that would be very helpful.
So, I mean, knowing about your 401k, like when you start a new job, you get all this paperwork and all these different things that they want you to do. And one of the things that they'll show you is they'll show you benefits, they'll show you retirement package, different things like that. But it's just, you're trying to get your day started. So you're just signing things, you're clicking buttons. You're not really 100% locked in, which it is what it is. It's fine. But most corporations now, most businesses will offer you some type of, if you're working full time, I should say, 401k, retirement plan. You don't have to check it every single day, but you should be pretty consistent about checking your statements at least once or twice a year. Like, I would recommend doing it every quarter. I realize that people are not going to do it, but at least once or twice a year, you should check your 401k. You should see if your company offers a match, you should definitely put money in up to the match. If you're able to move funds around and you're pretty market savvy, I would encourage you to look at the different funds that you're invested in, obviously looking at your balance every single year. If there's information about, when you are vested, if it's a year or two, if it's 5 years, 10 years, whatever it happens to be, just being aware of what you have available to you. And I think what happens with a lot of people, like I said, because they know they can't or shouldn't touch it until they're 59 and a half, they don't pay attention to it, which I understand the rationale.
Wow.
But you should still have an idea of what's in there so you know what's going on. So if the numbers aren't making sense, or like if there's a fund in there that's not performing very well, or you want to switch it up to where you are putting in a little bit more money in per check, you can do those things because you're on top of it, as opposed to one day you just leave the company. You're like, oh, I've been there for 15 years and I only have this dollar amount in there. Like, what happened? Right. So you just want to be on top of those things.
And enlighten me on this, because I know when I started a 401k, I just set it up. The guy that told me about it said, hey, you need to do this. And then years later, another fella came and said, hey, how are you contributing in your 401k? Like, what are the percentages? And I couldn't tell him. And he was like, what? And so he came in and helped me. He made some changes for me, which really helped. So I guess my question is, do you also help in such situations where, let's say you are somebody who's helping me with my finances now, can I still call you to help with a current 401k and helping me choose what I should be doing with the 401k?
Yeah, I mean, absolutely. You want me to take a look at your 401k and give you some recommendations and answer some questions that you might have? 100%. So
Okay.
as far as contributions, take advantage of the free money. So if your company offers 4 or 5% match on the money that you're putting in, you should put in up to that 4 or 5%, whatever that number is. It's the free money, right? So we want to take advantage of whatever free money that we can. Like I said, knowing about vesting is important. Knowing about what funds are important. Knowing about the match is important. There's lots of little things that we can look at. But yeah, I'm more than happy to take a look with you and answer questions and see how we can make sure the money grows as best as possible.
Because I think that's a huge added benefit. The reason why I say that was the second time we made those adjustments, it made a huge significant
Yeah,
change.
absolutely.
I was like, wow. And so if you have somebody like you to help with that, to help me make the best decisions, then that means I'm going to be making the best bang out of my buck, because you're going to be guiding, which I think a whole lot of people think because they have 401ks now, they don't need assistance. But I guess I'm pointing to the fact now that even if you do have a 401k, you probably want to talk to somebody like Theo so that you are getting the biggest bang for your buck. And I think you brought up something that's so important too, which we sort of need to touch on. You said because a lot of people think or know that they can't do anything with it till after 59. So you are saying because of that, that just lessens their curiosity, their motivation about knowing about this stuff?
Yeah, I mean, so for a lot of people, with your retirement accounts, you shouldn't touch it until 15 and a half. Like, that's kind of a number that's in people's heads. Like, there are some different accounts where it's a little bit earlier, but we work off 59 and a half. That's the easiest we can kind of work off. So yeah, so a lot of people just set it and forget it, right? Like I said, start to work one day, They sign everything. They say, this is your 401k. Okay, that's great. I know I can't touch it. And they just let it go. I mean, again, like I understand that rationale. I'm not saying you should check it every single day. Like you'll drive yourself crazy
Mhm.
trying to follow the market every single day, but you should just be aware of what's in there. Right.
Right.
And one of the things I always like to go back to is when we went through the pandemic, the thing that scared people is when they got sent home for 3, 4, 5, 6 weeks. The first
Yeah.
place they went to was that 401k, right? So
Mhm.
I'm not recommending that you should do that, but if emergencies come up and that's
Right.
your source of funds, you should at least be aware of what can happen if you take out money too early, any penalties, different things like that, how much
Right.
money in there to begin, all these different things. We want to look at those things and
Very
just be
important.
aware of the account.
Wow. Yeah, that's really cool. I think that's very important. A lot of people don't know that. And I think that's very important. It almost doubled my whole
Yeah.
stash. Just,
Mhm.
I mean, like
And
what?
that's the thing. Like you're just making small adjustments. Like we're not doing any,
Yeah.
changing things here. We're just making some small adjustments, making sure that you're taking advantage of everything that your company is giving you. That's what's
Right.
important. Just take advantage of the free money. Take advantage of that stuff, and it'll make a world of difference.
A huge one. Okay. So, should everyone be maxing out their 401k contributions? What are the pros and the cons, which you sort of touched on, but maybe you want to touch on some cons and pros in detail?
Yeah, so going up to the match is definitely important. So that's definitely a pro. The only con that I would say, I mean, there could be more, but the major one that I always like to touch on with people is going into 2026, we have tax laws right now where, believe it or not, taxes are at an all-time low at this point in time. But also on the flip side, we are in the most debt in a country that we've been in for a long time. So at some point in time, whether it's this administration or another administration, taxes are going to go up. So when you're putting in this money pre-tax, you're deferring your taxes along.
Mhm.
So when you're ready to take your money out, you're going to be taxed at those rates. So that's what we recommend, to not exceed
Got it.
that match. That's what we
Very
recommend. It. Again, all we can do is provide recommendations. We can't, quote unquote, make you do anything. We just
right.
provide recommendations. But that's why we want to say go up to that match. And then if you still have additional funds, we have, like we just talked about, IRAs, Roth IRAs. There's different places that you can put your money that's a little bit more tax efficient than a 401k. So that's,
Mhm.
I would tell you that's, and I don't want to say that's a con because it's not a con, but it's one of those things that you have to be aware of when you are saving into your retirement account. So just knowing what you can and can't do as far as like matching and different things like that. So just be aware of the account and just the rules that come with it.
Interesting. The next question is it better to max out both an IRA and a 401k? Which I thought was quite interesting.
It's what you have access to. So,
Mhm.
obviously there's pre-tax with the 401k. When you set up an IRA, this is going to be after tax money, right? So the gains will be taxed. So you're looking at different things. So again, like it'll come down to with your 401k, how much you're able to do with the match. And then with the IRA, is this going to be a consistent deposit every single year into this account? Or is this just a one-time deal? You had some
Got
extra,
it.
you're going to throw some money in there. So with financial planning, it's consistency. That's really the biggest thing with a lot of people. It's just being consistent, whatever you're going to do. So if you know every single year, I have an extra $1,500 and I want to just put it into my own IRA, do it. That's amazing. But it's got to be a consistent thing, because the last thing you want to do is just put in $1,500 and then, 10 years later, like what happened? Like, yeah, you got to be consistent. We got to, and that's part of that, creating that plan that we talked about before. It's just knowing we have access to, knowing the different rules, knowing the different accounts. And that's why I'm here, to make sure that you have those understandings.
That's awesome. Consistency compounds at the end of the day. That's
Yeah.
pretty much what it is. It builds up and before you know it, it's like looking so good. So the next question is, what is a solo 401k and who is it best suited for?
Yeah. So solo 401ks are for people who they own their own business and their own employee. So that's what a solo 401k is. And you're giving yourself access to a pre-retirement account. You own your own business. You are your employee. So you can create a solo 401k for yourself. And it's just part of the retirement planning process. And that will depend on where you're at as a business, right? So if you're a brand new business owner and you're a brand new employee to your own business, you're probably not going to do that immediately, because you want to get the business going. You want to get it up and running. And then we can make some decisions further down the road. But that's exactly who a solo 401k is for. It's for business owners. And it's typically business owners where they're their own employee. That's
Right.
typically who you'll see that for.
And there are no matches there.
Exactly. And if there is, it's you doing it, right? So yeah. So it's like I said, it's usually you're doing it for yourself. So whatever you decide to
Right.
do, knock yourself out.
Awesome. The next question is, can people really take cash out of their 401k? What are the consequences? That's a top question that I've seen out there, actually.
Yeah, absolutely. So it's dependent upon the company. It's dependent upon the rules that have been set up and different things like that. It's dependent upon those different things. But you do have access to your 401k. Usually with a 401k, you're able to loan yourself the money and then pay it back over time. If you're able to, it's just dependent upon those rules. So you are able to take money out of there. If you take money out of there and you don't pay it back, it's 10% penalty if you took it out before 59.5, and then it gets added to your ordinary income as well. So you just want to pay attention to those things. And then if you have an IRA, same type of deal, you can take the money out of the IRA, but there's still the 10% penalty. There's still the 59.5 rule. So I personally would suggest to not take the money out. But again, if it's dire circumstances, you're gonna, lose your home or something like that, or it's like a medical emergency, I get it. I understand it. It's not my money. I'll let you know all the information that you need. At the end of the day, if there's something like dire, you need the cash, you can take it, but just know that there's going to be some penalties and some income tax things that you're going to have to deal with the following tax season.
And the times that you have to pay them back, are they different per 401k, IRA, or it's just general?
Typically, so if you have an individual retirement account, let's say at New York Life, it's just a withdrawal for us, right? So you're just taking the money out. You cannot pay it back. You're just taking a withdrawal. Whereas with a 401k, as long as you stay employed with that company, you can go ahead and they'll set those terms up for you. They'll let you know what the loan interest rate is and all these different things and all the things you need to do as long as you're working. It'll be like another deduction from your check as you pay back the loan that you took. So if you're taking a loan because you're going to put the money back at some point in time, it's going to be more than likely a 401k thing. Whereas if you're doing an IRA, it's a withdrawal and you can't put the money back in.
Nice. That's good clarity there, actually, when I think about it.
Yeah.
Awesome. Okay. We just covered our 401k focus and we initially touched on the IRA focus. So we have one more question for Theo.
Yeah.
It kind of flows into the more advanced part of what we're talking about here, and is, can I roll Roth Solo 401k into a Roth IRA?
So it depends on how it was funded. So if it was funded with just money that was post-tax, you can roll it into a Roth IRA. If it was money that was pre-tax, we'll have to look at it a little bit closer. So it's a case-by-case basis that we can do that and we can use that one. But typically, again, like this is high-level overview, yes, you are able to do it. We just have to look at it and just see how the funds came into the account to make sure that when we put it into the new account, we're giving it the correct tax classification.
So it's more about the taxes in that instance, right?
Yeah, exactly. So we have every time we move money into different accounts, we always want to ask where the money started, like how the money started, what's the origination of the money. And then from there, we can determine what type of account that we can put in. Because you have options, you have places you can put it. We just want to make sure that we don't want to cause you any issues down the road once we move that money.
Wow. Those are like amazing questions that you've like touched on here based on the top questions that people want to know when it comes to financial planning their finances for their lives and, their future. And just like you said it, their retirement. So I want to personally thank you for coming to join us here and explain all this stuff to us. And I'm going to also give you the opportunity to let us know how you can assist other people out there that need this help, how they can reach out to somebody like you, and what the process would be and what they can expect.
Yeah, absolutely. So you can reach out to me. My direct phone number, my cell is 847-313-0245. Email address is tjpowell, so POWELL 01 ft.newyorklife.com. You can just reach out with an email or a phone call. It's a free consultation. So if you just want me to look over some statements and you have questions, I'm more than happy to do that. But when we sit down, like I said, I want to get to know you as best I can. I want to help educate you. So there's no simple or stupid questions or anything like that. Ask all the questions that you have. We'll sit down, we'll have a conversation, and we'll figure out what's the best plan of action. Typically, we'll meet 2, maybe 3 times before a client is ready to move forward with something. So, but again, this is a no pressure type of thing. This is more about me trying to help you and educate you and giving you and just being a resource for you. And then if you have people in your life that you think will benefit, I'm more than happy to sit down with them as well.
And can you assist anybody in the United States, or you have certain regions that you work with?
Yeah, so I'm licensed in 12 different states at this point, so I can work with a lot of different people. And if I'm not licensed in that state, I can look at getting licensed into that state as well too, so I can meet with that person after I get properly licensed. But yes, I mean, if you have family in California, I am licensed in California. If you have family in Arizona, I'm licensed there. Florida, different places like that. I'm licensed in Illinois, Wisconsin, among some other states. So
Wow.
more than happy to help. Obviously, with Zoom, it's pretty easy to jump on and have conversations with people, at
Right.
their convenience. So yeah, I'm more than happy to work with anyone.
That's awesome. Thank you so much, Theo. This was helpful. This was quite enlightening, even as much as it's like every time you hear stuff about planning your life when it comes to retiring and all that, it's like you always get new information. You might think you know it, but one thing I've learned is you do not know it all. And one thing I've learned is when you talk to the experts, you gain way more than
Yeah,
relying on yourself. So feel free to reach out to Theo to ask way more questions that you might have that we've not touched on here. So
exactly.
thanks for joining us.
Thanks, Maya. I appreciate it.
Awesome.